Hello everyone and welcome to fxstrategy.com. My name is Damon Rashid and today we're going to be taking a look at a very common technical analysis indicator known as the MACD indicator, which stands for Moving Average Convergence Divergence. It's a very complicated name, but thankfully it's a very easy indicator to follow, and it's a very powerful indicator. It's a momentum indicator, so it helps identify changes in the prevailing trend. And if you've been watching any of this series on indicators, you'll know that first of all I talk a little bit about the theory of the indicator, and then we go on and look at some practical examples. So just briefly talking about the theory, the MACD indicator is the difference between two exponential moving averages. Once again, that sounds complicated, but it's quite a simple idea. You have a shorter period moving average and a longer period one. So if I just bring it up here, if I click add, usually there's a 26 period moving average, which is the longer one, and a 13 period moving average, which is the shorter one. Once you click OK, this bottom section here is generated, and as you can see here, this line here is the shorter period moving average, and the one below it is the longer period. And if you've probably guessed by now that the shorter period one reacts faster to a change in the underlying momentum of a particular cross currency. So you can see here's a very good example where the lines actually converged down in this bottom section of the chart, and that's what you're really looking for here, is that the lines converging in the bottom section of this rectangular area is a sign to go long on a particular currency, cross currency, and when the lines cross in the upper region, that's an indication that something might be overbought, and it's an opportunity to short sell a particular cross currency. So so had we have gone long in this particular example here, we would have traded in about somewhere close to this bar here, and the shorter term exponential moving average raced off, and you can see there's quite a large difference between the shorter and the longer term moving average. But as the momentum changes, the shorter term exponential moving average changes faster than the longer term, so you can see that, and there's a change in the slope in these two lines. So by construction, at some stage they must converge again, which is really the beauty of the indicator. So if I was a trader, I'd be looking to short sell this particular cross currency around this time here. It's probably not too late to get into it, but that's the sort of thing we're looking at. And I also believe that this indicator works best when we look at longer time periods as well, 1 hour or 24 hours. You get a lot of false signals if you look at this indicator during shorter periods. Let's have a look, for example, if I bring up 1 minute bar and then I add in the MACD indicator, you can see that the indicator crosses a lot in the middle of the rectangular region, which is not a particularly good indicator, as it takes time for momentum to build up. So it's better if it happens in the bottom or the upper region of the chart. It still can be useful, but I prefer to use it for longer periods. Let's look at a couple more examples here. I'm just choosing these at random. We'll look at the Euro AUD. I'll move it back to 24-hour period, and we'll bring up the indicator. Once again, we see an example of it crossing here in the upper region of the rectangular area, and which corresponds to somewhere around this bar here. And you can see that the prevailing trend was down following that. You can see that the lines are crossing here again, which would have been a buy signal. Well, it is a buy signal, but they've crossed again a little bit further down. This quite often happens. There's a little bit of crossing and recrossing as a new trend gains momentum. So what I'd be looking for here is the shorter term moving average beginning to turn upwards, and when that might be a very good buy signal for the Euro AUD in the next few weeks. So let's bring up one or two more examples here. you've probably guessed I've got a bit of a cold, so please apologise for my voice. Well, here's a very good example with the Great British Pound, Japanese Yen. You can see that the lines, well, they crossed here, and as I said just before looking at the last chart, sometimes they cross and recross in the bottom section. But once this line, the shorter term moving average, turned up, that was a very good indication to go long. And you can see that there's a healthy gap between the two moving averages here, which is a signal that the trend is very healthy. But the lines have converged here, which is a sign that the trend has lost total momentum. So it might be a very good opportunity to short sell this particular currency right now, actually. So I might take a look at this after I finish the video. So one more point I'd like to make is that this indicator can be used in conjunction with technical analysis chart patterns. So if you have a particularly bullish chart pattern, which is confirmed by the MACD indicator, that's a very good signal to take that position. It can be used by itself as well. A lot of people trade on MACD alone, very successful traders, but I like to use it in conjunction with some of the technical analysis patterns as to, basically to confirm the pattern. Sometimes I'll trade it by itself, but I think it's the probabilities increase if it lines up with the technical analysis pattern. And the other thing I'd like to say is that these indicators are not 100% guaranteed. That's why they're called indicators. Basically what we're looking for is increasing the probability of an event. So as the line converges down here, where there's an increased probability that an uptrend will prevail, and that's good enough for trading. We're working on probabilities, so nothing is guaranteed, and I hope you understand that. I'll try to make that point as much as possible throughout this series of videos. So that's it for me on this indicator. Happy trading, and if you've got any questions, please feel free to go to our forum and we'll try to answer them as best we can. Happy trading.